Hello, my dear students. Welcome back. So, in the previous session, we are actually discussing SA 501. So, we started discussing it, and also we are done with more than half of the standard we are done with. So, let us have a quick recap so that we can have the connectivity and we can proceed further with the remaining part of the standard. So, we are actually discussing SA 501. I have explained what does SA 501 deal about. Tell me, guys, what does SA 501 deal about? So SA 501 is going to give us guidance about how to obtain audit evidence and what special considerations you have to keep in mind while obtaining evidence regarding specific items. That means they have selected three items, and as an auditor, how you can proceed to obtain audit evidence regarding those three selected items, what special considerations you have to keep in mind. That's what SA 501 is talking about. And I even explained you the difference between 500 and 501. 500 is a standard talking about audit evidence in general, whereas SA 501 is also a standard talking about audit evidence, but it is a specific standard talking about only specific items. Now, what are the three items which are selected regarding which SA 501 is giving us a guidance? Number one, to obtain audit evidence regarding existence and condition of inventory. Number two, completeness of litigations and claims. And number three, segment reporting. So why these three items are only selected? That is not the subject matter for our discussion. Just we have to remember that three items are selected, and this standard is going to give us guidance how to obtain evidence regarding this three selected items. In that first part we are done, how to obtain evidence regarding existence and condition of inventory. So if I try to summarize what we have told us, first, auditor should go and attend management's inventory counting. The management of every company will do the inventory verification. So as an auditor, you should go and attend that inventory counting done by the management. They can do it on the balance sheet date, or they can do it on other than balance sheet date. Whenever they are doing it, it is auditor's responsibility to go and attend it. By attending there, what auditor should do? The auditor should evaluate what are the processes management is following, sit and observe how they are doing the inventory counting, inspect the inventory. If you are getting bored, go and test, go and do the test accounts also. Next, so management is conducting physical verification. As an auditor, because of unforeseen circumstances, you are unable to attend that management inventory counting process. Then as an auditor, what you should do? You should try to do the inventory verification on your own on some alternative date. So you have to select some alternative date. You have to take your engagement team and go and do the inventory counting at least on sampling basis on some alternative date. Sometimes what will happen is, as an auditor, you are unable to attend inventory counting process. You want to do it on your own, but that also has become highly impracticable now. Then what you should be doing? Then the standard says you should try to perform alternative audit procedures. What you should do? Alternative audit procedures. Sir, what could be alternative audit procedures? There is no hard and fast rule. That's up to the auditor. Auditor himself has to decide what alternative audit procedures he could do to obtain. Just a minute. Yeah, sorry for the trouble. So we need to perform alternative audit procedures when we are unable to attend the inventory verification, or when inventory verification becomes highly impracticable, then auditor should try to perform alternative audit procedures. Sir, what could be alternative audit procedures? There is no hard and fast rule. That all depends on auditor. That all depends on auditor's professional judgment. And sometimes what will happen is, if alternative audit procedures has also become not possible, then auditor should try to modify his opinion. Which kind of modification? Either a qualified opinion or a disclaimer of opinion. Then we have seen one more small paragraph. Sometimes what will happen is, inventory will be recorded in your client's books, but that inventory might be held with a third party. Inventory held in the custody of third party. So like this we have seen. So sometimes what will happen is, your client will be the owner of the stock, but some third party is having the custody over that stock. You need to obtain evidence regarding that inventory also. How you will try to obtain audit evidence? Very simple thing. You try to obtain external confirmation. See, sometimes external confirmation alone will not be reliable. Then we need to perform additional procedures, like we can check the documentation, we can inspect the documentation, we can go and visit that third party's premises if possible. If it is also not possible, what we can do is, we can go and we can even arrange another auditor who will go on our behalf and do the verification on our behalf. So all these things we can do when the inventory is held with a third party. Clear, everybody? So this is what we have understood in our previous class. With that, one part of the standard we are done with. So till now I did not teach you anything new, just I have revised whatever I have explained to you already in the previous class. Now we will proceed further and try to understand the remaining aspects of this standard. So one part we are done with. Let us try to proceed ahead and understand the second item regarding which this standard is giving guidance. So what is the second item regarding which this standard is giving guidance? To obtain audit evidence regarding completeness. To obtain audit evidence regarding completeness of litigations and claims. To obtain audit evidence regarding completeness of litigations and claims. So now this is the prime focus here. How the auditor can obtain audit evidence regarding litigations and claims. So what exactly they are going to talk about? Let me try to explain that. So then we will understand what will be the audit procedures. See, as we all know, whenever the companies have started doing the business, in their course of business, it is quite common. They might have to go through some legal compliances. They might have to go through some legal issues. So many times they have to face the court of law. It is quite common. So no business is an exception for that. You see that so-called top and bigger companies, you might see the newly started companies, or you might find startup companies. So various businesses at various stages of their business life cycle, they face legal issues. You take the so-called biggest company, Reliance Industries Limited, they also go through some legal issues. You take the company so-called well nurtured companies like Infosys or Tata group of companies, they also go through some legal issues. Or you take the so-called startup companies, they also go through some legal issues. So it is quite common. So they do some mistake or they do some kind of non-compliance, someone will file a case against the company. So like this, so many companies will go through legal issues. Now, whenever a company is going through any legal issue, it requires proper presentation in the financial statements. If the company is going through any legal trouble, if there is any litigation going on, if there is any case going on in the court of law, that item needs to be presented in the financial statements. Sir, how litigations and claims will be presented in the financial statements? At which place they will be presented in the financial statements? Very simple, guys. Litigations and claims might be presented at two places. One is either it will be shown as a provision or a liability directly in the financial statements, directly in the balance sheet, or it will be shown either as a contingent liability. It will be either shown as a provision or it will be either shown as a contingent liability, but somewhere this particular item of this particular litigations and claims, somewhere they have to take presence in the financial statements. So assume that Nestle company, I will tell you one simple example. Nestle company, a few years back, someone filed a case against a Nestle company. In one of their product, Maggie, it contains some non-edible content. So if people start eating this Maggie, they might pile up some health issues. This is what the main concern against the Nestle. So someone has filed a case against the company. Now the company will be fighting this case. No company will take easy on any case. Why? Because especially for listed companies, going through some litigation will be a prestige issue for them. So that's why every company will fight the case. The case will be going on in the court of law. Now, whatever cases which the company is fighting, whatever cases that are going on in the court of law, all that cases, somewhere they should be presented. See, if we have more chances of losing the case, it is very much certain that company will lose the case. They might have to undergo some liability. They might have to pay some penalty. They might have to compensate the third party. So if that is the case, since the chances of losing the case are very higher, they have to create a provision. They have to create a direct liability in the balance sheet. On the other hand, if whether the client company will win the case or it will lose the case, it is uncertain. There are 50-50 chances. We might win the case also, we might lose the case also. If that is the case, that item should be shown as a contingent liability. But one thing is very much certain, whenever any litigation claim is going on, either it has to be shown as provision or it has to be shown as contingent liability. So as an auditor, we need to obtain audit evidence regarding completeness of the litigations and claims. We need to obtain evidence regarding completeness of litigations and claims. That means whatever litigations and claims which my client is going through, did my client completely show that in the financial statements, or they have hidden something in the financial statements? What is the objective? As per SA 501, this particular standard, SA 501, is going to give us guidance. It is giving us guidance regarding what? As an auditor, how can we obtain audit evidence regarding completeness of litigations and claims. That means whatever litigations, whatever pending cases which my client is going through, did my client completely presented in the financial statements, or they are hiding something in the financial statements? That I need to obtain audit evidence, and how I can obtain that audit evidence, that guidance has been provided in SA 501. Understood? Everybody clear till here? See, like the way we understood, what do you mean by obtaining evidence regarding existence and condition of inventory? I told existence means something relating to quantity of the stock. Condition means the quality of the stock. So we need to obtain audit evidence regarding existence and condition of the stock. Like the way we understood the first point, I'm trying to explain the second point also. What is our objective? We need to obtain audit evidence, whatever litigations and claims are there which my client is going through, have they completely presented that in the financial statements, either as a provision or as a contingent liability or not? That we need to obtain audit evidence. So let us try to understand now what SA 501 says, what instructions it is asking us to follow so that we can obtain audit evidence regarding completeness of litigations and claims. Shall we do it, guys? Let us do it. So we'll be reading the standard and we'll be trying to understand what we can do to obtain audit evidence regarding litigations and claims. Let us see. The auditor shall design and perform audit procedures in order to identify litigations and claims involving the entity which may give rise to risk of material misstatement. So first, what SA 501 is expecting us to do is, they are not directly asking us to find whether litigations and claims are hidden or not. First step, what they are asking us to do is, they are asking us to identify whether there is any risk of material misstatement relating to litigations and claims. Listen carefully. Very important point I'm going to make here. So please pay complete attention and listen whatever I'm saying. So first step, SA 501 is not asking us to directly go and find out misstatements in the litigations and claims. They're not asking us, you directly go and find out what mistakes are there in the litigations and claims. No. But instead, what SA 501 says is, you try to find out whether there is any risk of material misstatement regarding litigations and claims. Sir, what do you mean by finding out risk of material misstatement regarding litigations and claims? Very simple, guys. First, you find out, is there any chance? Is there any possibility that management could have hidden some litigations and claims in the financial statements? Find out the chance. Hope you are able to understand. SA 501 is not asking us, not asking us to directly go and find out whether there are misstatements in the litigations and claims. No, they are not asking us to do it. First, what they are asking us to do is go and find out whether there is any risk of happening of misstatement in the litigations and claims. Guys, there is a hell lot of difference here. Finding out a misstatement is different. Finding out a risk of material misstatement is different. What is the difference? Finding out misstatement means going and directly finding out the mistake. Finding out the risk of material misstatement means finding out the chance of happening of misstatement. So what SA 501 is expecting us to do? Are they directly asking us to go and find out the misstatement? No. But instead, what the standard is expecting us to do is find out whether there is any chance, is there any risk, is there any possibility of happening of misstatement in the area of litigations and claims. Sir, how can I find out, sir, whether there is any chance of happening of misstatement, whether there is any risk of material misstatement in the litigations and claims? How can I find out, sir? Standard is telling me to find out risk of material misstatement in the litigations and claims. But how can I find it out, sir? You need not worry about it. The same standard has given us guidance. How to find out the risk of material misstatement? That guidance is also given in the same standard, SA 501. So let us see now what guidance SA 501 is giving to find out the risk of material misstatement regarding litigations and claims. Shall we do it? Come on. I hope guys you are able to follow it. Let us see now. So once again I am reading this here. The auditor shall design and perform audit procedures in order to identify litigations and claims involving the entity which may give rise to risk of material misstatement. That means as an auditor, you first try to find out, is there any risk of material misstatement in the area of litigations and claims? How, sir? By doing the following activities. That means you have to perform the following activities. By that you will come to know whether there is a risk of material misstatement or not. Very simple 3 points they say here. Number 1, go and inquire with the management and where applicable others within the entity including in-house legal counsel. To know whether there is any risk of material misstatement, first step what you are supposed to do is go to the management and inquire them. Go to the in-house legal counsel and inquire them. I told you already what is in-house legal counsel. Some big companies will have their internal legal teams. They have some lawyers working for them as an employees, so that we call it as in-house legal counsel. So if there is any such in-house legal counsel, you have to go and inquire with them. Like you go to the management and ask them the question, sir, did you disclose all the litigations and claims or did you hide anything? Go to the in-house legal team and inquire them, sir, did you disclose all the items or have you hidden something from the financial statements? First step is go into the inquiry. With whom we will inquire? With the management we will inquire, and also with the in-house legal counsel we will inquire. Number 2, reading the minutes of the meetings of those charged with the governance and correspondence between the entity and its external legal counsel. Second step which they are asking you to do is go and read the minutes of the meetings of those charged with governance. So whoever top level management are there, they might have had the meetings during the year. If they have conducted the meetings, there will be minutes book. Go and read that minutes book and also find out whether there is any correspondence, whether there is any communication with the entity's external legal counsel. Now we need to understand what is the difference between this in-house legal counsel and other one is external legal counsel. What is the difference between the two? Very simple, guys. As I have told, assume Reliance Industries Limited is there. They have appointed some 5 lawyers as employees. They will be there with the Reliance only. Throughout the year, they will work as employees of the Reliance. Now, what is their responsibilities? Whenever company receives any notice, these lawyers will read it, interpret it, and tell to the management what is the issue about. Now, the Reliance has to fight the case now. They will not take the help of in-house legal counsel to fight the case. As I have told, so-called listed companies, they always want the reputed lawyers to fight the case. When I say in-house legal team, that means you are having a lawyers who are working with you as employees. If they are so talented, if they are having so much of skill, why they will work you with as employees? So the companies will make use of in-house legal counsel only to interpret the notices and tell to the management. Once they have decided that case has to be fought, the company will not fight the case with the help of in-house legal counsel, but instead what they will do is they will go to some external lawyers, they will appoint some reputed lawyers, they will fight the case on behalf of the company. So understood the difference between an in-house legal counsel and external legal counsel? In-house legal counsel within the team, whatever legal department is there. However, if the company has to fight the case, they will go to some external lawyer, a reputed lawyer, appoint him as a lawyer, and that external lawyer will fight the case for the company. So that's what in the second point they say here. So what they are saying here is, second point, read the minutes of the meeting of those charged with governance and also check whether there is any correspondence, whether there is any communication happening between entity and external legal counsel. Along with that, what you also do is review the legal expenses account. What auditor should also do, review the legal expenses account. That means verify the legal expenses account. Check what are the last year's legal expenses. What is the current year's legal expenses? Is there a drastic increase or is there a drastic decrease? Or is it more or less the same? So you try to do analysis of legal expenses account. So that's what first thing we should do. So if you come back to the chart, which I have prepared here. Yeah. So this one. So we need to obtain evidence regarding litigations and claims. For that, what the standard is asking us to do? They are first asking us to identify whether there is any risk of material misstatement. First step, they are asking us to identify whether there is any risk of material misstatement regarding litigations and claims. By doing 3 simple things, only 3 things you do to identify whether there is any risk of material misstatement. What are the 3 things which I should do? Go and inquire with the management and also in-house legal counsel. Number 2, read the minutes of those charged with governance. Number 3, review the legal expenses account. So when you do these 3 things, you will come to know whether there is a risk of material misstatement or there is no risk of material misstatement. So if you have done these 3 things, which 3 things if you would have done? Come on. So if you would have done these 3 things, number 1, you inquired with the management and those charged with governance. You read the minutes of the meeting and check the communication with the external legal counsel. You reviewed the legal expenses account. Once you have done these 3 things, 2 outcomes could be possible. One is you might find out a risk of material misstatement. That means you are having a suspicion. Yes, there is a chance of hiding of some litigations and claims. Or one more thing which could be possible is you did not find out any risk of material misstatement. If you have done these 3 steps, if you have inquired with the management, if you have read the minutes of the meeting, if you have reviewed the legal expenses account, 2 outcomes could be possible. One is you might find out a risk of material misstatement. Like for example, I was verifying legal expenses account. Last year the legal expenses were 1 lakh. Current year legal expenses were 10 lakhs. But I'm not able to find any litigations and claims explanation. That means what? Here there is a risk of happening of misstatement in the litigations and claims or not. So like this, once you have done these 3 steps, 2 outcomes could be possible. One is you might find a risk of material misstatement. You might find that there is a chance of hiding of some litigations and claims in the financial statements. Other thing which could be possible is you did not find out any risk of material misstatement. You thought everything is fine. There is no need to suspect. See, if you did not find any risk of material misstatement, very good. By performing these 3 steps, you end your audit procedures. You are not supposed to do anything extra. You have performed these 3 steps and you did not find any risk of material misstatement, you can end your audit procedures with that. But in case after performing these 3 steps, if you found out the risk of material misstatement, then we need to proceed ahead and perform the further audit procedures. Perform what? Further audit procedures. Guys, able to understand what I'm trying to say here? Yes or no? So first, the standard is asking us to do some procedures to identify whether there is any risk of material misstatement. How we can identify whether there is any risk of material misstatement regarding litigations and claims? 3 simple things. What are they? Do the inquiry, read the minutes of the meeting, review the legal expenses. When you have done these 3 things, 2 outcomes could be possible. You found a risk of material misstatement. You did not find a risk of material misstatement. If you did not find any risk of material misstatement, you are not supposed to do anything extra. End your audit procedures with that. But in case if you find the risk of material misstatement, then you are supposed to perform some extra things which are mentioned in this standard. Sir, what I should do if I find a risk of material misstatement? Let us see now. So you should understand the standard in this manner only. You should have all the background discussion. See, whatever effort I am putting here now to make you clear the concept. See, I can read the standard and finish it off in 15 minutes, but I don't want to do it. I want you to give the conceptual clarity. So let us see now. If the auditor assesses a risk of material misstatement regarding litigations and claims. So if I read it, if the auditor assesses a risk of material misstatement regarding litigations or claims that have been identified. That means if you find a risk of material misstatement, then only you are supposed to do something extra. What is that? Let us see. So if the auditor assesses a risk of material misstatement regarding litigations and claims, or when audit procedures performed indicate that other material litigations or claims may exist. That means you performed audit procedures and those procedures are indicating that there could be some other litigations which management is trying to hide. See, both convey same meaning. When I say there is a risk of material misstatement, or when I say I performed audit procedures and found that there could be other litigations which are not disclosed in the financial statements, nothing but I am saying there is a risk of material misstatement. So after performing the above 3 steps, if you find that there is a risk of material misstatement, then the auditor shall, in addition to the procedures required by other SS, seek direct communication with the entity's external legal counsel. So you perform the above 3 procedures. You found a risk of material misstatement. Yes, there is a chance of some litigations and claims being hidden from the financial statements. Now, as an auditor, what you should do if you find risk of material misstatement? So the standard is asking the auditor to communicate directly with entity's external legal counsel. So company could have appointed some external lawyers for fighting the case. No, if you find that management is trying to hide something in the financial statements regarding litigations and claims, what auditor should do? Auditor should go and communicate directly with entities external lawyers. Sir, he has to say, I'm an auditor of this company. My client is saying, I have a doubt that my client is hiding some litigations and claims. Please, you tell me what litigations and claims my client is having. So like this, if you find a risk of material misstatement, the auditor of the company can directly communicate with entities external legal counsel. Sir, how he can communicate, sir? How the auditor can communicate with entities external legal counsel? What the standard says is auditor should communicate with the entity's external legal counsel through a letter of inquiry. That means whatever information auditor wants, that he has to write a questions in a piece of paper. What and all information you want, you put those questions and send that letter of inquiry to the entity's external legal counsel. So if the auditor finds any risk of material misstatement, he needs to communicate with external legal counsel through a letter of inquiry. But if you observe carefully here, there is a problem here. So the problem is, as an auditor, you will not have complete details regarding entity's external legal counsel. You will not have complete details regarding entity's external legal counsel. Why, sir? See, as an auditor, you will only know who is that external lawyer. You will know only who is that external lawyer. The name of the external lawyer only you will know. Apart from that, whom you have to send that letter of inquiry, to whom if you address it, you will get back the reply. In what manner, if I send the letter of inquiry, I will get the reply. That as an auditor, I am not aware. Guys, I hope you are able to get the connectivity. So what I'm saying is, the standard is saying if you find any risk of material misstatement, communicate with entity's external legal counsel through a letter of inquiry. Agreed. But the problem here is, I don't know how to communicate, whom to communicate, in which manner if I send the letter of inquiry, I will get the response. As an auditor, I will not know all this information. But who will know all this information? The management will know all this information. Who will know all this information? The management of the company will know all this information. Whom to communicate, how to communicate, in what manner you have to communicate with the entity's external legal counsel, the management will come to know. So that's why what the standard is saying here is, as an auditor, you communicate with entity's external legal counsel through a letter of inquiry. But since you don't know how to communicate, whom to communicate, and in what manner to communicate, they are asking, ask the management to prepare that letter of inquiry. As an auditor, take the help of the management. Go to the management and say, sir, I want to communicate with your entity's external legal counsel. I want to get this information, but I don't know how to communicate, whom to communicate. You know it. So you prepare the letter of inquiry for me. I will tell you what information you want. I want you prepare the letter of inquiry for me. You will go and ask whom? Management. Who will ask? Auditor. So auditor wants to communicate with entity's external legal counsel. You have to prepare a letter of inquiry, but you don't know how to do it. So the standard says, ask the management to prepare the letter of inquiry. They will write clearly whom you have to send, how to send, in what manner if you send, you will get the response. That management will prepare it and I will send it. Able to understand? So management will prepare the letter of inquiry, auditor will send it to the entity's external legal counsel, and the auditor will ask the entity's external legal counsel to respond back directly to the auditor only. To respond back directly to the auditor. So if you read it, you will understand. So if I read it, so what they are saying in the first point, if you find any risk of material misstatement, communicate with entity's external legal counsel. But how, sir? They explain it in the B point. The auditor shall do so. That means the auditor shall communicate with entity's external legal counsel through a letter of inquiry prepared by management, sent by auditor, requesting the entity's external legal counsel to communicate directly with the auditor. So the auditor should communicate with entity's external legal counsel through a letter of inquiry. That letter of inquiry will be prepared by the management, sent by the auditor, and in that letter of inquiry, I request the entity's external legal counsel to respond back directly to me. So take for example, if I try to visualize the things here, assume that one of the big four entity, Deloitte. So there is a Deloitte. Deloitte is the auditor. They are auditors. They are conducting audit of the company Reliance Industries Limited. So Reliance is a client. Now this Reliance Industries Limited, they have appointed some external lawyer, some reputed lawyer, advocate Mr. M. So advocate M, a famous lawyer is that they have appointed this lawyer. Who appointed? Reliance Industries Limited. They have appointed this external legal counsel to fight the case for them. Now while conducting the audit of Reliance Industries Limited, I found a risk of material misstatement. What I should do? I should communicate with directly this advocate M. But what I will do is, I will ask the client to prepare the letter of inquiry for me. The management of the client will prepare the letter of inquiry for me. After they have prepared the letter of inquiry, as an auditor, I will send it to the entity's external legal counsel. And I will ask this advocate to respond back directly to me only, not with the management. This is what they are asking you to do. So if you find the risk of material misstatement, communicate with entity's external legal counsel through a letter of inquiry prepared by the management, sent by the auditor, requesting the entity's external legal counsel to reply back directly to auditor. Comfortable till here? Next. So let us address next point. See, when the management gives permission, good. Sometimes what will happen is management will not give you letter of inquiry. They will reject to support you. Or sometimes management will support you. They will give the letter of inquiry. You sent it to the external legal counsel, but he did not respond. Sir, why entity's external legal counsel did not respond? There could be 1,000 reasons for that. Might be he is prohibited as per his guidelines. Like we chartered accountants have to maintain confidentiality, lawyers also have to maintain confidentiality. Might be entity's external legal counsel, because of his rules and regulations, he should not respond. Or external legal counsel wants to respond, your client is not allowing him to respond. Anything could happen, no. See, if everything goes well, if management prepared letter of inquiry, you send it to external legal counsel, he gave the response. If everything is going fine, you should not worry. But in reality, always everything will not happen in a smoother manner. Sometimes what will happen is you go to the management and ask them, sir, you please prepare a letter of inquiry for me. Management said no. Or management prepared the letter of inquiry, you sent it to the external legal counsel. External legal counsel did not respond. Either he is prohibited from responding, or as per his rules and regulations, he did not respond. Then what should happen, sir? Let us see what does the standard say. If the management refuses to give the auditor the permission to communicate or meet with the entity's external legal counsel. Sir, why management permission is required? Why? Because management only should prepare a letter of inquiry for me. I went to the management and told, sir, I want to communicate with your entity's external legal counsel. Please prepare a letter of inquiry for me. Management said, no. No, sir, we will not permit you to communicate with our entity's external legal counsel. Or the entity's external legal counsel refuses to respond. See, either management refused to give the permission, or management gave the permission. You send the letter of inquiry, but external legal counsel refused to respond. He said, I will not respond back. So he refuses to respond appropriately to the letter of inquiry, or law or regulation or other respective professional body prohibits the entity's external legal counsel from communicating. See, lawyers are also guided by the bar council rules and regulations. Now, these lawyers are prohibited by this bar council guidelines to share the client's information with anybody else. So like this, whatever could be the reason, management gave you letter of inquiry, you sent it to the entity's external legal counsel, but now he is not responding. Either because of his professional obligations, or he is prohibited from the client to not respond to the auditor. Then in that case, what should happen? The standard sorted out everything with one simple thing. In all these cases, the auditor should perform alternative audit procedures. That's all. Simple discussion. In one word, they have ended the discussion. So if everything is happening well, very good. If something is falling out of the place, either management did not give permission, or external legal counsel refused to respond, then what auditor is supposed to do? Simply as per SA 501, try to perform alternative audit procedures. Sir, what could be alternative audit procedures? Once again, there is no hard and fast rule. What alternative audit procedures he could perform, that auditor should make it out himself and try to do that. Anything. The auditor can think of anything. So if he believes that if I do this particular thing, I will get audit evidence, do it. There is no specific rule. Whatever alternative audit procedures you can think of, you do it, and you try to get the evidence. Sometimes what will happen is you did not you found risk of material misstatement. You want to communicate with entity's external legal counsel, but things did not happen. You tried to perform alternative audit procedures. You did not think of any alternative audit procedures, or you performed alternative audit procedures, but they also did not give audit evidence. Then what should happen? If alternative audit procedures are also not possible, then what should happen? Modify the opinion, either qualified or disclaimer. Same like the previous case only. So first we try to do whatever is mentioned in the standard. If not possible, alternative audit procedures. Sir, if alternative audit procedures are also not helping me, finally give the modified opinion. Which kind of modification? Either qualified or disclaimer. Why? Because it is a case of non-availability of audit evidence. So that's what they say. If the auditor is unable to obtain audit evidence even by performing alternative audit procedures also, then the auditor shall finally modify the opinion in the auditor's report in accordance with SA 705. Clear? So should I tell you the summary first? What 4 points we have covered here? A, B, C and D. First I will tell you summary, then we will proceed further with the next point. Number 1, you should find out whether there is any risk of material misstatement regarding litigations and claims by doing 3 simple steps: inquiring with the management and in-house legal counsel, reading the minutes of the meetings of those charged with governance, reviewing the legal expenses. By doing these 3 steps, 2 things could be possible. One, you found a risk of material misstatement. Other one, you did not find risk of material misstatement. If you did not find any risk of material misstatement, you need not bother at all and your audit procedures with that 3 steps. In case if you find any risk of material misstatement, then you need to proceed further and you have to communicate directly with the entity's external legal counsel. How to do it? Through a letter of inquiry. Prepared by whom? Management. Sent by whom? Auditor. Requesting the entity's external legal counsel to respond back directly to auditor. Now, either the management is refusing the auditor to communicate with legal counsel, or management permitted but external legal counsel refused to respond. In all that cases, what auditor should do? Perform alternative audit procedures. Sir, if alternative audit procedures are also not possible, then what I should do? Modify the opinion. Clear? Understood? Now, few more things here. In certain circumstances, the auditor may also judge it necessary to meet with entities' external legal counsel to discuss the likely outcome of litigations or claims. This may be the case, for example, that see sometimes. So, what is the meaning of this point is sometimes the auditor might feel that communicating with the entity's external legal counsel through letter of inquiry alone will not be enough. In some cases, some circumstances, the auditor might feel that communicating with entities external legal counsel alone is not enough through letter of inquiry. You might feel that it will be better to go and meet with the legal counsel directly, to have a personal meeting. Generally, normal circumstances, you can communicate with entities external legal counsel through letter of inquiry only. But in some extreme circumstances, auditor might feel that communicating through letter of inquiry alone will not be enough. It might be appropriate for him to go and meet with the entity sectional legal counsel personally. Directly go and meet with the entity sectional legal counsel. Sir, in what circumstances the auditor might feel it necessary to go and meet with the entity sectional legal counsel directly? So, that circumstances they are saying here. So, if I read this point once again, in certain circumstances, the auditor may judge it necessary to meet with the entity's external legal counsel, not just communicating with letter of inquiry. He might feel it appropriate to go and directly meet with entity's external legal counsel to discuss the likely outcome of pendings. This may be the case, for example, where, sir, when auditor will feel it necessary to go and meet with directly the entity's external legal counsel, they're giving some circumstances here. In which circumstances the auditor determines that the matter is a significant risk. If the auditor feels that this litigation is very much important, this risk could be a very bigger risk, very major risk. So when you find because of litigation the risk is very big, then just communicating with the letter of inquiry alone will not be enough. You might decide to go and meet with the entity's external legal counsel directly. Or the matter is very complex, the matter is very difficult to understand, you are not able to understand it properly. Or there is a disagreement between management and the entity's external legal counsel. You communicated with letter of inquiry, external legal counsel gave a response, but whatever management is saying, whatever entity's external legal counsel is saying, both are not matching. There's a difference between what management says, there's a difference between what external legal counsel has responded through a letter of inquiry. Now also you might feel that to sort out this misunderstanding, it will be wise enough to go and meet with the external legal counsel directly. Understood? So this is what this particular point. In some circumstances, just communicating with the letter of inquiry alone will not be enough. The auditor might feel it necessary to go and meet the entity's external legal counsel. This will happen in three cases: when the risk is a significant risk, when the matter is very complex, or when there is a disagreement between the management and entity's external legal counsel. That means what the management is saying and what entity's external legal counsel is saying, both are not matching. There is a disagreement, then also auditor can go and communicate with the entity's external legal counsel. Clear? See, in one of the examination, they have posed a 3 marks question out of this one single point. This one point alone has been tested in the examination as a question. Sir, how a question has been tested? To show you this, let me take you through test your knowledge. Where it is given. Yeah, this one. See how carefully, how tactfully they have asked a question. SPR Limited has been into media business since 1990. During the financial year 2021-22, many notices were received by the company for hurting public sentiments, which is quite common nowadays. And financial claims were filed against the company. So this media company hurted the public sentiments and someone has filed the case. As an auditor of the company, you requested the management for arranging the meeting with company's external legal counsel. As an auditor, you went to the management and asked, sir, I want to go and personally meet with your entity's external legal counsel. You are not saying, I want to communicate through letter of inquiry. What you are directly asking, sir, I want to go and personally meet with your entities, meet with your external legal counsel. Please make necessary arrangements. Management is of the view that such meetings are necessary only in some certain circumstances only. However, management believes that auditor going and meeting with the entity's external legal counsel is required only in some circumstances. Can you list down those circumstances? See the question here. They are asking you indirectly in what circumstances you are required to go and meet with entity's external legal counsel. That is what the question. So the question is what? So when it will be necessary for the auditor to go and personally meet with entity's external legal counsel, in what circumstances auditor will do it? So what you are supposed to write here, this paragraph, whatever we have just now completed, this is what you are supposed to write. So in three circumstances, it will be necessary for the auditor to go and meet with the entity's external legal counsel directly. Number one, when the risk is a significant risk, when the matter is complex, when there is a disagreement between the management and the entity's external legal counsel. See how out of a small paragraph they posed a scenario based question. So that's why I always tell you, you tell me if you don't have conceptual clarity, if you don't understand the roots of the standard, will you be able to interpret that question first of all? You will not be able to interpret from where they are asking the question. That also you will not be able to find it out. So that's why I'm spending this much amount of time on explaining all the background concepts. Listen carefully. Whatever time we are spending here, everything is worth here. Next one. And ordinarily, such meetings require management's permission and are held with a representative of the management in attendance. Generally, what will happen is when you want to go and meet with entities external legal counsel, it will happen only after getting management's permission. And also in most of the cases, what some external lawyers will do is, sir, as an auditor, if you want to meet with me, please bring some representative of the management. That means if I want to go and meet with the lawyer, external lawyer, so what the external lawyer might request you in some cases is, okay sir, I will meet with you, but bring someone from the management, bring at least one board of director as a representative, then only I will come and then only I will meet you. So like this, sometimes external legal counsel puts a restrictions, then I have to, if I want to meet him, I have to take some representative on behalf of the management. Next one more last point. The auditor shall request management and where appropriate those charged with governance to provide written representations that all known, actual or possible litigations and claims whose effect should be considered when preparing the financial statements have been disclosed to the auditor and are appropriately accounted and are disclosed in accordance with applicable financial reporting framework. Nothing guys, very much simple. So in addition to performing all the above procedures, the auditor should also get written representation. Sir, what is written representation? For the time being, just remember it as confirmation from the management or those charged with governance. Written representation means what? A confirmation from the management and those charged with governance. More about written representations, we have a dedicated standard SA 580. We will discuss in this chapter only. So when we discuss this SA 580, you will come to know in more detail what is this written representation. But for the time being now, remember this written representation as confirmation, some confirmation which we are getting from management and those charged with governance. Clear? So as an auditor, one more step which you are supposed to do as per SA 501 is, after performing all the above procedures, as an auditor, ask the management to give written confirmation. What written confirmation? That all those litigations and claims which are required to be considered in the financial statements, they have disclosed everything to the auditor. They did not hide any litigations and claims from the auditor. And also ask them to give a written confirmation that they have disclosed everything in accordance with applicable financial reporting framework. Just a formality. You ask the management, not just oral confirmation, ask them to give a written confirmation regarding what, that whatever litigations are and claims are there, they have to give a written confirmation that, dear auditor, we did not hide anything from you, we disclosed everything, and also we disclosed every litigation and claim in the financial statements as per applicable financial reporting framework. Ask the management to give a written confirmation. So that written representation also you have to obtain. So as I have told, just remember written representation as a written confirmation. More about written representation, we'll talk about it later in the same chapter when we take up SA 580. Clear? So this is what you need to do in order to obtain evidence regarding litigations and claims. Hope everybody is able to understand. So whatever we have understood till here, so the same thing I have summarized it in the form of chart, like as you could see. So completeness of litigations and claims, perform audit procedures to identify risk of material misstatement by doing three steps. Number one, inquiring with the management, reading the minutes, review legal expenses. By doing these things, by doing these three things, if you find that there is a risk of material misstatement, then what we should do? The auditor shall communicate with entities external legal counsel. How he will do it? Through a letter of inquiry. Prepared by whom? Management. Sent by whom? Auditor. If management refuses or external legal counsel does not respond, or they are prohibited from responding, then what auditor will do? He will perform alternative audit procedures. If alternative audit procedures are also not possible, then modify the opinion. Which modification? Either qualified or disclaimer. And you have to obtain written representation also. In addition to that, if there is any significant risk, if the matter is very complex, if there is a disagreement between management and external legal counsel, the auditor should also directly go and meet with entities external legal counsel. In that cases, just getting a letter of inquiry alone will not be enough. You should go and directly meet in these three circumstances. See how simple it is. We have spent almost some 45 minutes in understanding the concept. But once we understood the concept, entire concept, we are able to revise it in just a span of 5 minutes. Not even 5 minutes. We took somewhere around 2 minutes to revise the entire part of the standard. Clear? This is how you have to learn the things. Practically, you have to learn, and using this kind of charts, you have to remember the content also. Why? Because you have to learn the concept and also reproduce. Then only you can get the full marks. Understood? Hope you're all comfortable with the discussion till now, whatever we had regarding this standard. Everybody clear and comfortable? So two parts of the standard we are done: how to obtain evidence regarding existence and condition of inventory, and how to obtain evidence regarding completeness of litigations and claims. So now we are left with the last part of the standard. So as I have mentioned, this standard is going to give us guidance regarding three items. One is to obtain evidence regarding inventory, other one is regarding litigations and claims, and the last one we have, this standard is going to give us guidance regarding the last item, which is regarding segment reporting. So now we are going to talk about segment reporting. So you might have already been aware of what do you mean by this segment reporting. So you might have read it in accounting standards. So when you read accounting standards, you might have been explained about AS 17. Guys, if you did not listen to the AS 17 yet, don't worry. I will just give you a brief more on this. You will know once in the accounting subject you have learned that AS 17. So AS 17 is the accounting standard which is talking about segment reporting. You heard about segment reporting? So AS 17 says you have to identify the segments: primary segments, secondary segments, geographical segments, business segments. So that segment wise information you have to present. Take for example Reliance Industries Limited. See, when you open balance sheet and P&L of Reliance Industries Limited, you will be able to see their overall company's financial performance and financial position. So when you open the balance sheet of Reliance Industries Limited, you might see that the total fixed assets of the company are some 2 lakh crores. Similarly, if you open the P&L statement, you will be able to see the total revenue of the company 6 lakh plus crores, and the total profit of the company some 1 lakh crores, 1 lakh plus crores. So like this, whatever balance sheet you see, whatever P&L you see for the company, that is the performance of the company as a whole. But as we know, when I say Reliance Industries Limited, the Reliance Industries Limited is having is deriving its revenue from multiple businesses. So the main businesses are, it is there into petroleum business. It is there into petroleum business. It is also there into telecom business. It is there into retail segment. It is also there into various other kind of businesses. Now, what A17 says is, now the entire financial performance of the company should be divided segment wise. So for example, assume that this business segments I want to divide. So the total revenue of the company is 6 lakh plus crores. Now, how much revenue has it derived from petroleum business? For example, assume that 3 lakh crores of turnover, it is deriving from petroleum. 1 lakh crore it is deriving from telecom. Another 50 lakh crores, 50,000 crores, they are deriving it from retail segment. And rest of the 1.5 lakh crores, they are deriving it from other businesses. Similarly, the total profit is 1 lakh crores. How much profit did they derive from petroleum business? How much profit did they derive from telecom business? How much profit did they derive from retail business? How much profit they derived from other businesses? They are having a total fixed assets of 2 lakh. So out of that, how many assets belong to petroleum business? How many assets belong to telecom segment? How many assets belong to retail segment? How many assets belong to other segments? So like this, the entire financial data of the company, we are dividing it into segment wise. This is what we call it as simply segment reporting. Let me see whether I can show you some example here. Yes, we have Reliance Industries Limited audit report. So in that, I can show you, in this I can show you somewhere. Just give me a moment. Can I search here? I think no, I can't search here. Not a problem. So let me show you this. So see here, I have searched for it. So this is what the segment information presented for entire Reliance Industries Limited. So if you see here on the face of the balance sheet, you will be able to find that the revenue is somewhere around this much figure, 7,92,756. But as I have told, this Reliance is having multiple businesses. They are into oil business, oil and gas business, retail business, digital services, financial services, other services. So now if you see the total revenue has been divided, how much they are making it from O2C business, oil and gas how much, retail business how much, digital service how much, financial services how much, others business how much. Similarly, they made a total profit of, see for example here, let me show you one more thing here. So this is regarding revenue from operations. So if you want to know further information like total assets are 15 lakh 16,555 554 crores. So if you see how much assets belong to each segment, that also they have divided. Similarly, they have divided segment liabilities, capital expenditure they have divided, and also depreciation expenses they have divided. So this is what I can simply call it as segment information. So like this, the companies are required to present segment information as per the requirements of AS 17. Now, regarding the segment information, as an auditor, you need to obtain evidence regarding certain information. So let us see now what is my responsibility, how I can obtain audit evidence, whether this segment reporting, whatever they have done, whether it is correct or not, I need to obtain audit evidence. Now, what does SA 501 tell you regarding how to obtain audit evidence regarding segment reporting? What are your responsibilities? Very simple, guys. If I have to end the discussion in one line, what they will simply ask you to do is we have to check whether segment reporting has been prepared as per AS 17. That's all. So AS 17 gives us guidance how to identify the segments. They ask us to do some calculations. So as an auditor, what we need to check is whatever provisions that are mentioned in AS 17 regarding identification of segments, whether those calculations are done by the management properly or not, whether they complied with the requirements of AS 17 or not, that we need to obtain evidence. And also we need to check on what basis these assets are divided, on what basis revenue has been divided, allocation has been done properly or not. That if you obtain audit evidence, that's all, your responsibility is over. In one line, if I have to end all my discussion, whether AS 17 requirements, whether applicable financial reporting requirements relating to segment reporting has been complied with or not. If you check it, that's all. Apart from that, nothing else you are supposed to do. So this part of the standard is very simple one. Simply you need to check the compliance with applicable financial reporting framework. Not even that important from the examination perspective, but the previous 2 points, to obtain evidence regarding existence and condition of inventory, to obtain evidence regarding completeness of litigations and claims, those two are very important. Segment information very rarely tested and also very easy one. Like if we read it just in 2 minutes, we can complete it. Let us see what we are supposed to do here. The auditor shall obtain sufficient and appropriate audit evidence regarding the presentation and disclosure of segment information in accordance with applicable financial reporting framework. Whatever segment information is there which is presented in the financial statements, is it as per applicable financial reporting framework? What is the applicable financial reporting framework here? AS 17. How you can do it? By obtaining an understanding of methods used by the management in determining segment information. First, you should understand what methods are followed by the management to identify the segments. See, I can identify segments in various categories. One example I have shown you, Reliance Industries Limited has divided the segments on the basis of different businesses. If you look at some other company, they can divide the segments on the basis of geographical locations. Some companies might be there in different locations. They might divide their segment information on the basis of location. See, even Reliance also can do. Reliance is having total 7 lakh plus crores of turnover. How much revenue they are making it from each state, that also they can do it. So like this, first we should understand what methods are used by the management in determining segment information. Further, evaluate whether such methods are likely to result in disclosure in accordance with applicable financial reporting framework. So once you understood what are the methods used by the management, we should evaluate whatever methods that the management has used, whether they are as per applicable financial reporting framework. Management should not adopt their own methods. They have to follow only those methods which are mentioned in accounting standards. And also, where appropriate, test the application of such methods. See, you also know accounting standard. You might also have read it. You know how to do the calculation. So what you can do is you do the calculations on your own, then try to compare it with the management's calculations. And perform analytical procedures or other procedures appropriate in the circumstances. See, what we can also do is we can perform analytical procedures. How we can perform analytical procedures? See here. See, this is current year's information. Along with that, they also give you previous year's information. See here. So this is the segment information for the year 2021-22. Along with that, for comparison, they will give you segment information for 2020-21 also. Now we can perform analytical procedures. How we can perform analytical procedures? I will calculate in the current year how much percentage of revenue out of the total revenue, how much percentage came from O2C business? Same ratio, I will calculate it for the previous year also. Out of the entire previous year's turnover, how much percentage has been derived from O2C business? I will calculate the ratio. For example, here I got that in 8 lakh, somewhere around 4 lakh 99,000, assume some 60% of the revenue was there from OTC. Whereas in the last year, assume it was 50% only. Now I'll try to do the comparison. Last year it was 50%. In the current year, O2C business contributed 60%. What is the reason for that difference? I will try to investigate further. This is what I simply call it as analytical procedures. So you even try to perform analytical procedures also on the segment information. Nothing but you try to compare with the prior year, calculate, see whether there are any huge differences. If you find any huge differences, investigate them further. So this is what the first part. As an auditor, you should obtain sufficient and appropriate audit evidence whether segment information has been prepared as per the applicable financial reporting framework. For this purpose, you need to obtain understanding of the methods, what methods management is using for identifying segment information, and you test that methods on your own whether they have adopted proper methods only, and also try to perform analytical procedures. Now if you read the second point here, if you see, I am asking you to understand what methods are used by the management in determining segment information. No, what specifically you will try to understand, that they are elaborating it in the second point. In the first point, they say they ask you to obtain an understanding of what methods are used by management for determining segment information. In the second point, they give us examples of what we exactly need to understand regarding methods used by the management. Let us see what we need to exactly understand. So examples of the matters that may be relevant when obtaining an understanding of methods used by the management. So what matters you will try to specifically understand regarding the methods used by the management. Number one, how sales, transfers and charges between the segments and elimination of inter-segment amounts. Nothing but I will try to understand on what basis they are allocating the assets. Sales they are allocating. So if you see here, sales they have divided among different businesses. On what basis they have divided? There should be some basis for calculation, no? So you should understand what is the basis for dividing that asset. On what basis they have divided sales, on what basis they have allocated sales, on what basis they have allocated assets, on what basis they have allocated liabilities, that I will try to evaluate. And also whatever inter-segment amounts are there, that needs to be cancelled between segment to segment. If any inter-branch or inter-segment transfers also, you can say, they needs to be eliminated. Next one, see, for that also I have your example here. So if you see here, yeah, they have allocated this. Now sometimes what will happen is between some inter-branch, if adjustments are there any, they will try to cancel it finally. So like that, if any, here I am not able to show the perfect example, but what you simply have to understood is between the segments, like inter-branch transfers you will eliminate no at the time of finalization. Similarly, inter-segment transactions also should be eliminated. So check on what basis sales and other assets have been allocated, and if there are any inter-segment amounts, whether they have been eliminated or not. Comparison with the budgets. Even you can also compare with budgets. So for example, in the current year, we budgeted that O2C business of Reliance will contribute 60%. Now I will check whether actually really the 60% target has been met. But I came to know that actual results was it was contributed only 50%. I will try to analyze why we are falling short of budgets. Next one, I will also try to understand on what basis assets are allocated, on what basis costs are allocated, and also will check consistency with the prior periods and also adequacy of disclosures and inconsistencies. Nothing but even I will try to compare it with the previous years and check whether they are consistently getting prepared or not. So very simple guys, segment reporting, and as I have told, not that important from the examination perspective. Very simple. In one line, if I have to give you summary, check whether segment information has been presented in accordance with applicable financial reporting framework. That's it. That is what simply segment reporting, regarding segment reporting, you as an auditor are supposed to do. So with this, we are successfully done with the entire standard SA 501. We understood how to obtain evidence regarding existence and condition of inventory, how to obtain evidence regarding litigations and claims, and also we are done with how to obtain evidence regarding segment information. So now we will try to solve test your knowledge questions to get a better clarity. XYZ Limited is engaged in manufacturing of different types of yarns. On going through its financial statements for the past years, it is observed that inventory is material to the financial statements. You as an auditor of the company wanted to obtain sufficient appropriate audit evidence regarding existence and condition of inventory. How would you as an auditor proceed? So straightforward question, they are asking you as an auditor, how you will obtain audit evidence regarding existence and condition of inventory. So they are asking you from this first point. But the question will be asked only for 4 marks. Will you write this entire detailed manner? No, you need not write it in a detailed manner. Just you have to write the summary. Sir, what kind of summary I have to write? First, you write this point. As an auditor, you have to go and attend the inventory counting. No need to write this extra points. You can ignore. I have to write a summary. They are asking how, as an auditor, you will try to obtain evidence regarding existence and condition of inventory. If you see the material, the content is very huge, but you need not write all these things for 4 marks. What you can do is you can write a summary. So I will write the first point. Don't write this detailed points. Then I will write the second point. Third point also I will write. This point I will skip. What matters you have to keep in mind while doing inventory counting. This point I will skip. This I will not write it. Then this point also I will write a summary. I will write only the first point. If attendance at physical inventory counting is impracticable, the auditor shall perform alternative audit procedures. If alternative procedures are also not possible, modify the opinion. That's all. I need not write the sixth point also. So like this, you have to draft your answer according to the number of marks the question is getting tested. So if they are asking you how you as an auditor will try to obtain audit evidence regarding existence and condition of inventory, I will not write all this detailed information. I will try to write a summary. Skip irrelevant content. Next one. Next question. Paramount Exports Limited is a manufacturer exporter having its own production capacity and also gets the job work done through various job workers. The auditor of Paramount Exports Limited considers that inventory held with the job workers is material to the financial statement, such as the audit procedure in the given case. So, straightforward question, guys. Inventory held in the custody of third party. How you will try to obtain audit evidence? So, inventory is there with the job worker. That is, inventory is held in the custody of third party. How you will try to obtain audit evidence? So, this point you are supposed to write here. Next one. Third question. Pride India Limited is a manufacturer of various FMCG range of products. The company is having several litigations and claims pending in the courts. The auditor wanted to identify litigations and claims resulting to risk of material misstatement. So they are asking you to write about audit procedures to identify risk of material misstatement regarding litigations and claims. See, they are not asking you entire audit procedures. They are only asking you to identify risk of material misstatement, what procedures you will perform. To identify risk of material misstatement regarding litigations and claims, what audit procedures you will perform? I will write only this first point. I will write only this first point. So I will write this introductory line, then I will add this 3 points. That's all. They are asking that much only. How you will try to obtain audit, how you will try to obtain risk of material misstatement regarding litigations and claims. I will end my explanation with this. Why? Because they are not asking me entire audit procedures. They are asking me what procedures you will perform to identify risk of material misstatement. Next one. I think fourth question we have already solved it. Fifth one. Pacharanga International Limited is a manufacturer of pickles, ginger garlic paste, jams, etc., having its plant at Jaipur. Being in the food industry, the company is facing many litigations in various courts across India. Auditors SPV and Co. wants to identify such litigations and claims involving the company which may give rise to risk of material misstatement. Guide the auditor as to how they should proceed for the purpose. Same question, no? Just the previous question which we have completed. So as an auditor, what procedures you will perform to identify risk of material misstatement relating to litigations? What we will do? As I have told, once again, only first point we will write. Why? Because they are asking us only to write audit procedures regarding how to identify risk of material misstatement relating to litigations and claims. Able to understand? Now, in case if they ask you the question, after you have identified the risk of material misstatement, then what procedures you will perform, then you have to write the second point. If they're asking you to find out risk of material misstatement regarding litigation, we will write only first point. If they are giving in the question, the auditor identified that there is a risk of material misstatement regarding litigations and claims, then what audit procedures you will perform. If they ask you that question, then we have to write from the second point. Okay. So you have to be very careful when reading the question. You have to understand what the exact question is. Then you have to write the suitable answer. Next one. The matter of difficulty, time or cost involved is in itself a valid basis for impracticability. Do agree? This point I have already answered at the time of explanation. You can't use difficulty of time, cost as a reason for impracticability. When I say impracticability for physical verification, it should have become impracticable because of reasons beyond your control. The auditor cannot say there is a difficulty of time, there is a difficulty of cost. Can that be used as a reason for impracticability? The answer is no. So the correct answer is the matter of difficulty, time or cost involved is in itself not a valid basis for impracticability of physical verification. Next one. If the auditor assesses a risk of material misstatement regarding litigations or claims that have been identified, seek direct communication with entity's external legal counsel. The auditor shall do so through a letter of inquiry prepared and sent by the auditor, requesting the entity's external legal counsel to communicate directly with the auditor. Is the given statement true or false? The given statement is false. The auditor will try to communicate with the external legal counsel through a letter of inquiry. Prepared by whom? Management. Sent by whom? Auditor. But what they are saying? Prepared and sent by the auditor. Do you agree with that? No. Letter of inquiry will be prepared by the management, sent by the auditor. But in the statement they are saying prepared and sent by the auditor. So that's why the given statement is false. It will be prepared by the management, sent by the auditor. So that thing, if you change and write the answer, that will be correct. Next one. Explain clearly the examples of the matters relevant in planning attendance at physical inventory counting. This is a straightforward question, guys. So we have no matters which are relevant in planning attendance at physical inventory counting. This one. This C point, this fourth point you are supposed to write. Matters which are relevant in planning attendance at physical inventory counting. These points you are supposed to write here. So next question. Yeah, one more question we have. Let us try to finish this also. GPS and Co. Chartered Accountants conducting the audit of Prativa Limited, a listed company for the year ended 31st of March 2022, is concerned with the presentation and disclosure of segment information included in the company's annual report. GPS and Co. wanted to ensure that methods adopted by the management for determining segment information have resulted in disclosure in accordance with applicable financial reporting framework. Guide GPS and Co. with examples of matters that may be relevant when obtaining an understanding of methods used by the management with reference to relevant standard on audit. See, from the question it is very clear. They are asking you about how the auditor should obtain evidence regarding presentation and disclosure of segment information. And what they're specifically asking is, when you try to understand the methods used by the management regarding segment information, what matters you will try to understand. So as we have seen in the standard, auditor should obtain understanding regarding methods used by the management regarding segment information. But what specifically you will try to understand? What are the examples of the methods which you will try to understand? So this is what the second point addresses. So examples of matters that may be relevant when obtaining understanding of methods used by the management. So they are asking you to give some examples which you will understand regarding the methods used by the management regarding segment information. So what you will understand? So how the sales are allocated, we will try to compare with the budgets, we'll check how the assets and costs are allocated, and even we'll try to check the consistency with the prior periods. So this paragraph you are supposed to reproduce, you will get the full marks. Clear everybody? So this is what SA 501, very important standard and very frequently tested standard in the examination. So this standard you should never ever miss out from your preparation. So hope you are able to understand, guys. In the next class we'll meet again with another standard. So that's all for today. See you again in the next class. Bye everybody, take care.